Robinhood's on-chain Gambit. Welcome, digital pioneers and financial adventurers, to Mythbusters, the podcast edition. Today, we're not just talking about the future of finance. We're witnessing a major player making a monumental leap. The world's buzzing about blockchain as the new gold rush, and for good reason. But is it just hype? Or is a company like Robinhood, long known for commission-free stock trading, actually building the literal highways of tomorrow's financial world right beneath our feet? On June 30th, 2025, Robinhood made a historic announcement, a suite of new crypto-centric products. This isn't just a few new features. It's the blueprint for an audacious, vertically integrated, on-chain financial ecosystem. They're launching tokenized US stocks and crypto perpetual futures in the EU while building their very own Layer 2 blockchain. We're here to bust some myths about what this really means for Robinhood, for crypto, and for your investments. Let's unravel Robinhood's on-chain Gambit. Myth number 1. Blockchain is just for crypto enthusiasts and a niche technology. Our first myth, often echoed in traditional financial circles, is that blockchain is just for Bitcoin maximalists, niche crypto projects, or a fringe technology. The mainstream financial world, they say, will never truly adopt it as core infrastructure. Robinhood's move is a powerful, direct challenge to that idea. Their flagship offering in Europe isn't some obscure altcoin. It's tokenized US stocks and ETFs. Picture this, you're an investor in Europe, and instead of navigating complex traditional brokers, you can now buy a digital token representing a share of Apple, Microsoft, or Nvidia right from your Robinhood app. This isn't just a representation. Each token is one-to-one backed by the actual underlying US security that Robinhood holds. And when those companies pay dividends, you, the token holder, get them directly in your app. This is Wall Street, digitized and sent across the globe on a blockchain. And here's a massive differentiator. These tokens are tradable 24 hours a day, 5 days a week. No more waiting for markets to open or close in New York. This bridges the always-on nature of crypto with traditional finance, offering unprecedented flexibility. While initially, token holders won't have voting rights, a strategic move to simplify launch, the economic benefits are all there. This isn't niche, it's democratizing access to global giants using blockchain as the backbone. Robinhood is banking on crypto becoming the actual spine of the global financial system. Verdict number 1. Is blockchain just for niche crypto enthusiasts? Myth busted. Robinhood's strategy demonstrates a clear ambition for blockchain to become a core, mainstream financial infrastructure, bringing traditional assets onto the chain. Myth number 2. Robinhood is just adding more crypto products or continuing its identity as the meme stock broker. Host. Many might see this as Robinhood simply adding another line of crypto products, or continuing its identity as the meme stock broker. Our second myth is that Robinhood's new announcement is just a product expansion, not a fundamental shift in strategy or identity. This is perhaps the biggest misconception. Robinhood isn't just adding features, they're fundamentally rebuilding their entire company on-chain. The core of this audacious long-term strategy is the development of their very own proprietary Layer 2 blockchain. This isn't just using someone else's digital road, they're building their own superhighway. This custom Layer 2 is explicitly being optimized for tokenized real-world assets, or RWAs. The tokenized US stocks they just launched on Arbitrum, they'll eventually migrate to Robinhood's own chain. Why? Because owning the infrastructure gives them total control over the user experience, security, and the very economics of their ecosystem. This means they can manage transaction fees and potentially even introduce their own gas token, creating new, sustainable revenue streams that aren't tied to controversial models like payment for order flow. As their head of Robinhood Crypto, Johan Kerbot, put it, they intend to rebuild Robinhood entirely on-chain. This isn't a small pivot, it's a declaration of intent to transform from an application layer service to a fundamental infrastructure provider. It's a classic crawl, walk, run strategy. Get to market fast with existing tech, then dominate with your own. Verdict number 2. Is Robinhood just adding more crypto products or remaining solely a meme stockbroker? Myth busted. This is a profound strategic pivot to become a foundational blockchain infrastructure provider for the entire financial system. Myth number 3. Tokenizing private assets like SpaceX is easy or imminent for retail investors. Host. Robinhood's ambition doesn't stop at public stocks. They've publicly stated plans to tokenize shares of highly sought-after private companies like OpenAI and SpaceX. This sounds like a dream for retail investors, finally access to pre-IPO giants. Our third myth is that tokenizing complex private assets and making them widely available to retail investors is an easy or imminent undertaking. While the demand is massive, the reality is far more challenging. This is the holy grail of RWA tokenization, but it's riddled with immense hurdles. Valuation nightmare. How do you value a typically illiquid private asset in real time for a constantly trading token? Private equity funds are usually valued quarterly. A token needs constant, accurate pricing, introducing volatility that regular investors might struggle with. Legal and regulatory maze. This is a massive hurdle, especially in the United States. Tokenizing private equity involves navigating incredibly complex securities laws, shareholder agreements, and transfer restrictions. The legal structuring, often through special purpose vehicles, is heavy. The regulatory framework for this in the US is virtually non-existent. Privacy paradox. Private equity thrives on confidentiality. Publicly visible on-chain transactions showing fund shares, capital calls, and net asset values would be unacceptable for most funds and investors. This creates a fundamental tension with the public nature of most blockchains. Technical and security risks. Proving a token's legitimate link to the underlying private asset and securely holding that asset are major technical and security challenges. Robinhood's decision to pursue this is a strategic driver. The immense user demand for tokens like OpenAI or SpaceX could force the creation and refinement of the necessary legal and technical infrastructure. They're essentially using user interest to subsidize their R&D in this complex area, solving problems for highly visible assets to create a replicable model for thousands of others. But it won't be easy or quick. Verdict number 3. Is tokenizing private assets for retail investors easy or imminent? Myth busted. While Robinhood's ambition is grand, the complexities of valuation, regulation, privacy, and technology make it an incredibly challenging long-term endeavor. Myth number 4. Regulatory environments are uniform or the US's leading blockchain innovation. Our final myth addresses a common assumption about global finance, that regulatory environments are roughly uniform or that the US is automatically leading the charge in blockchain innovation. Robinhood's strategy is a masterclass in challenging this. Robinhood's entire European launch hinges on the regulatory clarity provided by the EU's Markets in Crypto Assets Regulation, MiCA. MiCA offers a unified legal framework for crypto assets and service providers across the entire EU, reducing compliance friction and providing the certainty needed for large companies to launch complex products. Robinhood's EU entity is fully authorized by the Bank of Lithuania, giving them a passport to operate across the entire EU EEA. This proactive, clear regulatory stance in Europe provides a first-mover advantage. It's a textbook example of regulatory arbitrage, launching where the rules are clear and favorable. Now, look at the US. The reason these innovative products aren't available stateside is a stark contrast: the absence of a clear regulatory framework. The US approach has largely been regulation by enforcement, primarily by the SEC, which creates uncertainty and significant risk for innovators. Robinhood's executives have explicitly stated they're waiting for a bit of clarity before deploying similar features for US users. They're building the tech, but in the US, they're in build and wait mode. Robinhood's European launch isn't just about market expansion, it's a strategic pressure play on US regulators. By successfully operating these innovative products under MiCA, Robinhood creates a powerful narrative and lobbying tool. They can tell US lawmakers, look at the innovation, investment, and market activity we're generating safely in Europe. We want to bring that home, but we can't because of the lack of clear rules. The US is falling behind. This makes the conversation less theoretical and more practical for regulators.
Verdict number 4. Are regulatory environments uniform, or is the US automatically leading blockchain innovation? Myth busted. The EU's clear MiCA framework is driving innovation there, allowing companies like Robinhood to pioneer products that the US regulatory ambiguity currently hinders. The new financial frontier. So, as we wrap up this ambitious episode of Mythbusters, the podcast edition, what's the ultimate verdict on Robinhood's on-chain Gambit? Robinhood's bold pivot is confirmed as one of the most ambitious strategic plays in modern fintech. They are attempting to build the financial infrastructure of tomorrow, today, by leveraging Europe's regulatory clarity for a crucial head start. The path is certainly fraught with immense technical, market, and regulatory challenges. Running their own Layer 2 blockchain requires constant vigilance against security risks like bridge exploits and smart contract bugs. Attracting enough liquidity for tokenized assets and perpetual futures is a chicken and egg problem for any new exchange. And the US regulatory landscape could still shift in unforeseen ways. But the potential reward is immense. A central role in the 21st century's tokenized on-chain economy, redefining what it means to be a financial services company. This might just be remembered not merely as a product launch, but as the moment a retail brokerage declared its intent to rebuild Wall Street on the blockchain. Thank you for joining us on this deep dive into the blockchain frontier. Stay curious, stay informed, and keep an eye on those digital highways.